I cannot wait to show you this interview with CNBC and Barbara Corcoran. It's super important to me because this is something that we've been talking about for several weeks now. Barbara Corcoran is talking about the real estate market, the mortgage interest rates. We all know the Fed decided to maintain interest rates, which was a positive direction for mortgage interest rates over the next several months. What Barbara is going to talk about, and I want you to listen, take the time to listen, she's going to talk about why this is a great time to buy today, not 2 months from now, because 2 months from now, you're going to be competing for your home. And it's going to cost you a lot more. So if you could put an extra $10,000, $25,000, $50,000 worth of equity in your home right now, as long as you can afford the house, you know the payments, you can afford it, this is a part of your budget, then I want you to listen to what Barbara has to say, and we'll talk about that a little bit more.
I want to first talk about real estate because we know prices, rents, ownership costs have soared. There was some Redfin data out today, take it for what it's worth, that showed that rents may be topping off or even coming down in some areas. Do you believe we may have seen the short-term peak in prices and or rents?
Yes, I think we've seen the short-term and the emphasis on short-term peak in rental prices because there's been a lot of new inventory built. And so people aren't going to be paying the same this year as they paid last for their rent. But not much. I think there's been a 3% degradation in prices. But don't count on it. You're much better off buying something now while you can. Because if you don't have a chit in the game and you continue to be a tenant and wait the market out, which many people are thinking right now they should be doing, they're dead wrong. Because the minute actual interest rates actually come down just one more point, everybody's going to jump into the market and you're going to be paying a lot more for your house. So if you have any way of getting the cash together and getting into the market and buying a house and getting out of the rental, which is tempting to keep because it's a little cheaper, don't do it. Buy yourself a house.
Do you believe that it looks like the 10-year yield could drop below 4% very soon at current rates? It was at 5%. Do you think mortgage rates have also peaked, Barbara?
No, they have peaked. Yeah, most people believe that. You know, none of us are fortune tellers, but everyone's expecting that prices on mortgages will come down to 6%, and maybe even a little lower than that. Some pundits are saying about it. I don't really know. But what I do know is they will come down. And when they come down, everybody's going to hear the call and everybody's going to be out looking for a house again.
You know what's amazing, Barbara, is I look at some of these areas around the country that people moved to during the pandemic, and prices in some cases literally doubled. Price per square foot,
yes,
maybe it was
right.
$400. Now they're trading at $800. Can you help us make sense of that?
There's no sense, rhyme, or reason to it at all. They're just lucky people. And on top of the luck of buying a house that's appreciated so much, they were helped with 2%, 3% interest rates. But if you're one of the people thinking, gosh, is that train going to come in for me? It's never going to come again. Interest rates are never going to come down that low to 2 or 3%, 4, and maybe even 5%. But here's an interesting thing that I only discovered this last week. I looked at the average interest rate in the last 50 years in America, and it was almost 8%. And yet people relatively are seeing our current interest rates as a lot of money. They're really not. They're simply average.
So what Barbara is saying is, and we put that out in our last video, what she's saying is as the interest rates are coming down, there are still plenty of homes to be had. So as the interest rates come down, the worst thing that could happen to our real estate market right now is they would come down too much. Because what happens if they would come down, you know, they'd make a huge jump to, 6%, 6.5%, potentially even lower. That means everybody's out in the market. They're bidding for homes again, like we saw during the pandemic. So the reason Barbara and many other pundits are saying get into the market now is because when the rates come down, everybody and their brother is going to be out looking, which drives the home prices up. The reason the home prices are going to be driven up is because we do not have a great deal of inventory. We haven't over the last 10 years. So with that being said, if you could find a house now, an existing house that has been on the market, you're going to save yourself a lot of money. $10,000, $15,000, $25,000, $50,000 versus the market moving forward. And at that point, as long as you can afford it financially, it's part of your budget, get into the market. And as we've expressed before on several of our posts, over the last 30 years, the real estate market has increased in Eastern Iowa. we've maintained. We haven't had too many highs. We haven't had too many lows. We've just gradually increased. And so that just means wherever you get into the market is going to be important. There aren't fabulous deals out there. If you're waiting for the rates to get lower, it's going to catch you on the other end because you're going to pay a lot more. Okay? So real estate has done this over the last 30 years. If you can get into the market at any point, you're always going to create equity most of the time. So when that right house comes up 3 or 4 or 5 or 10 years down the road, you're going to be able to move that equity into the next home or use that equity for your business or whatever else. We're just saying right now, I think is the perfect opportunity. Usually this time of year this is even a better opportunity right now. So Matt Smith signing off, and certainly if you ever have any questions, reach out. We're happy to help.